this will be recorded to YouTube. So either way, I think the comments that we have to share in here will be really important for our users. So why don't we go ahead and get started with some team intros and just kind of just chat in general. So yeah, I'll go ahead and start. So my name is Doomsy, and I also go by Bumsy. I'm the head of marketing here, and we'll pass it off to Harry.
Yeah, I'll go next. I'm Crip Walk. I'm one of the co-founders here.
GM. Harry, I do tech, smart contract development, and just general lead the tech department.
Hey, yeah, I'm not. I work in the internal policy team with all the quants helping build out all these products.
Heyo, I'm Carney. I do the biz dev work here to make sure we have price feeds and other types of partnerships.
Thanks, team. Yeah, I thought I would just open it up, and we're definitely going to talk about V2 today. But yeah, I was thinking we could talk about recent events in our industry, things with Binance and Coinbase going on, and just see if anyone on our team had any comments to see how that might relate to Y2K or just in general. So yeah, does anyone have any thoughts regarding that?
Yeah, it's pretty like a lot of things have taken off. Like even like I'm from Australia, and the Binance like AUD off and on ramps were like closed off like a week or two before it. So just like even from where I like live, it's been pretty interesting watching it like unfold locally as well as like the SEC side.
Yeah, most definitely. Without disclosing where I am, we're experiencing some issues as well, just with some of our exchanges. But um, yeah, what else? What are you guys experiencing out there in where you guys are at?
I think yeah, similar to you, Bumsy. Just kind of, I'm American, so like my Binance USD account is out, obviously fucked right now. So I think it's a lot of chaos in the short term, but hopefully we get some clarity about how these markets actually get regulated in the long term. So interested to see how this goes.
Yeah, it's definitely a interesting week to speculate on like pegs. Well, not even week, this is period really.
Yeah, for sure.
Yeah, for sure. I think that's a good transition for us to talk about how V2 and Y2K's release of that is basically going to allow us to handle these types of times as well. So, yeah, for those that aren't familiar, we released V2 less than a week and a half ago at this point. And essentially, we've added a lot of flexibility to our system. That's one of the main differences. So what that means is our ability to have different assets as collateral. That was huge. So for example, beforehand, we just had ETH as collateral, and you had to use that in order to enter the vaults. But now we're able to add assets like Arbitrum, which we released in our V2 vaults, and we will be able to support other assets in the future, which is huge. Another big thing for us is the underlying oracles that we use. Before it was just Chainlink oracles, and we are now able to potentially use other ones if we would like to. So these are some of the big things going on with V2. Additionally, a huge user experience thing was the carousels and rollover feature that we introduced. So what that allows users to do is have a 24/7 deposit window. So you can add a deposit anytime you would like to, instead of waiting for just the regular window to open and have to time it. So that's a big thing for us and for users as well. And then I would say the other really big thing is the fact that if you would like to roll over into the next deposit, we've added a rollover function, which allows you to continuously participate in the vaults. So that's kind of an overview of our V2. There's definitely a lot more things that I didn't touch on, but wanted to give a chance to each of my teammates to just kind of discuss what they've been working on regarding V2 and what they're excited about, what it will enable for users. So we'll just pass it off to someone on our team if they want to comment on their area.
Yeah. So on the IP side of things, we developed like the information tax, which has been like a dynamic like fee system that kind of goes off the actual market dynamics. So it'll like have like a direct relationship with the premium and like an inverse relationship with volatility. And then it's like just like a way that we can like future proof the way that kind of systems like works, because especially with these developments with Binance and the SEC and off ramping, like you can never really like make like an arbitrary like tax with something like that. So that was like pretty interesting, just like making like a system that's kind of simple but like has to be complex in like the thought process and designing.
Sure, I can go next. I mean, we've been working on V2 for a long time. We went to multiple audits. We really tried to develop a reliable and bulletproof relay infrastructure, because with rollovers and queues, and basically because you give up the atomicity, that you basically have real time mints on chain. But basically you're gonna queue your transaction up in the future, and that's why we rely on relayers to handle that action. And it was quite a challenge to build out the system, but now we went through multiple audits, and we feel we're in a good spot, and yeah, we are happy to gradually roll out V2 features. Not to all markets, we're gonna go step by step, and yeah, really try to like mature the system, and yeah, try to provide users the best user experience. And yeah, I mean, just to comment on the stuff before, I wasn't able to say something, but the DeFi assets in general, they have under inherent risk, right? They have an underlying risk, and we believe we can create a market for these risk parameters. And with V2, we have the ability to create these, to adapt or like to implement these oracles to serve the risk market. And we already have quite a few in the pipeline. Quite a few are in beta testing, and we hope to soon launch new V2 markets that gonna bring new risk markets to the users.
100%, and I completely agree with what you mean with like how V2 is more dynamic with the type of markets we can offer, even something like collateral. Like down the track, you just don't know what like on Arbitrum, the bulk holders, the users might be holding like more Arbitrum than ETH for whatever reasons, like it's more incentivized or something like that. So it's good that they kind of got a system where we don't have to make them like definitive choices. We can just do it as like the community wants it as things develop.
Exactly, and we're also aware that currently it's really a end consumer facing product that we have with Earthquake and our dApp. Basically, everyone who wants to participate needs to participate over our interface. But we really believing in a vision where we can be an infrastructure provider in the DeFi ecosystem, basically like a money Lego block, where other projects can use Earthquake vaults to run strategies to hedge against risk, underlying risk that assets that they manage might have. And we are really interested in exploring those markets and launching them on Earthquake. And we're also working on basically making our system more integratable with other systems. And we're going to launch a extensive documentation and guides on how to integrate with Earthquake.
For sure. And even DeLorean recently released a GLP GMX hedging strategy using Earthquake infrastructure, which I thought was really cool, to hedge the fiat risk that you get with that position. So yeah, it's cool already seeing that side of things rolling out.
Yeah, I was on that call yesterday with the DeLorean team, and the thing that stood out to me was that we have someone who's directly building using our vaults, of course, which is great, but it's also really great for our users because we have somebody taking the other side of things. So it's just a constant source of potential income on in terms of the premium side of things. They're continuously using the premium side of the vaults, and so therefore anybody who wants to provide the insurance side is able to collect higher fees as long as things don't depeg. So just kind of a constant rate of income for users participating.
Totally. And even a lot of big like hedge funds, like some of their hedges, they would almost like eat their hat if they ever were like filled and the options were assigned. But it's kind of just to make sure that they don't blow up. They buy these just like things that they're not really planning on assigning, but it's just like a source of premium. And then how I even started kind of building up my own capital was just taking the other side of that and just not praying for black swans, underwriting collateral. But it's kind of just like a healthy ecosystem, as healthy as trading gets.
Yeah, definitely. That being said, I think that the partnerships team has been working really hard on some things, and there are a lot of things in the pipeline as well. So, Karn, do you have any thoughts or comments there?
Oh yeah. So something a little teaser coming up. If you look at all the chaining fees that are on testnet, you can see they have oracles related to the ETH staking rate. They also have oracles about the realized volatility of large cap assets like BTC and ETH. I will stop there and say, yeah, we're taking a very close look at those to see what we can come up with.
Yeah, that's definitely a lot of alpha right there. Is there any other partnerships that you're currently excited about?
Oh yeah. Let me keep going. So on the Oracle side, there's so something we've noticed not helped a lot on is to figure out like, hey, like for all these different stable coins, what is it that we're actually looking at when the oracles give us a price? And we found that like for a lot of stable coins, they trade very differently depending on like which exchanges they're listed on, whether those are centralized exchanges or dexes. And some stables they're like widely traded on both dexes and sexes, but some other tokens are only on dexes. And one of the things about stable coins that are mostly on chain or mostly like native on chain, they don't really have any sex exposure. Many current oracles are not able to track those properly. They rely heavily on the data that's coming in from centralized exchanges. So we are talking with a few different Oracle vendors to see how we can better track the more of the on-chain native assets. And once we sort of crack that nut, figure out like a good methodology to track and also filter out noise, we should be able to spin up the very first markets on some of the longer tail assets. As for other types of integrations, if you take a peep at the DIA Oracle community forum, you will notice that we have a Y2K price feed from DIA. I will also leave it as a teaser there as to what that might be used for.
Yeah, once again, just a lot of alpha coming from the partnership side, I would say. And based on everything you said, it looks like our efforts are geared towards providing more assets in a reliable way to our Y2K users, right? So, yeah. If there's
Maybe
anything-
I can jump in a bit, Mzi. So yeah, other than what Karm said, we have been also working on a few other things, such as new markets, right? If you looked into the dev updates in Discord, you realize for the last 2 sprints, we have been posting updates about new markets. So we also coming up with new market types. And I guess like there are 3 different market types we are working on at the moment, but one little alpha can be there. We are going to launch our first PNL market pretty soon, which will enable users to hedge against potential losses on G-Trade and as well as underwrite that losses. Furthermore, we are working on some enhancements, such as we are trying to bring more gamification to our platform. We are trying to bring more data visualization for users to do educated deposits. And as well as we are looking into how we can enhance the Y2K experience by providing post-DPEC options. But yeah, I guess this is also where I'm going to stop. Sorry for the interruption, Dumzi.
No, all good. As Oracle just alluded to, there are definitely other types of assets that we're looking to onboard. So for those in the community that had questions, hopefully that gives you a little hint right there. And we'll definitely try to drop more teasers as we go along. So yeah, I was thinking now, just in terms of looking ahead. So we just dropped some teasers on some of the specific things that we're working on, but just from the team's perspective and what we can share with the community, what can we sort of look forward to with Y2K's evolution coming up next, maybe over the next couple months, and what are our sort of aims and what we're trying to achieve there?
I can jump in a little bit. So I think 2 big milestones for us that we've talked about for a while are, one, moving to more perpetual style vaults, and 2, some kind of secondary market built on top of Earthquake. So, without giving too much away, we've already spec'd out what we believe would be a pretty efficient secondary market on top of Earthquake that could potentially allow users to interact with the vaults with leverage. So that should be coming up in this next quarter. And beyond that, our North Star is to, by the end of the year, be able to make Earthquake positions on the risk and the hedge side as perpetual. And doing both of those things, like Harry said before, we think will allow us to be that Lego and DeFi, that infrastructure where people could come in and participate in these risk markets, either as just retail or DAOs in general.
100%. And architecture like that is a lot more complementary to more institutional type traders, with like more of a linear payoff compared to like a binary. So it's kind of becomes more of a building block for all facets of like trading, which is really exciting.
Yeah, and another thing that we're looking to kind of press the gas pedal in the mid to short term is also allowing cross-chain deposits as well. We think, we're very grateful for, the support we've got from Arbitrum, and we, just being on Arbitrum itself has been pretty successful for us, but we think it's about the time to allow users from different chains to be able to interact with the Earthquake vaults. So in, kind of with those other things that I just mentioned, like the perpetual vaults and the secondary markets built on Earthquake, we're looking to integrate all of those in some kind of cross-chain infrastructure that allows people to deposit from different chains, while the settlement may still be done on Arbitrum.
Yeah, and that kind of again with the whole building block mission that we've been like building with, it just helps with that as an act, just like a lot of like most protocol, like big like Curve and Uniswap, things like that are on multiple chains. But just with the structure that like our vaults work, we had to kind of overcome with like a settlement layer basically. Otherwise, we'd have to like fragment these vaults across chains with like different sources. So it'd get kind of like split up. So through this kind of way, it's just like a lot more efficient for like the protocol holistically. And it's not kind of that the health of a market isn't definitive by like the pure liquidity on one chain, which is really good because you might have an interest in one type of asset, but you need to be on some type of chain for some reason, and that asset's not traded on there as much, So it's really good, for that in a I don't know, like a more like cutting out the like the endless clicking that crypto kind of gets us into sometimes. That cycle.
Yeah, 100%. I think for those that are on this call or those that are listening after, there's a ton of exciting things to look forward to that Crip just mentioned for Y2K. So we're really looking forward to adding those things over the next couple months, and appreciate the community for being here. And I think we've got some community questions. So we've actually got, let's see, 2 questions. So we'll get to those real quick. So is the goal of Y2K to be seamlessly integrated into DeFi protocols without the user knowing that they use Y2K? So is that a goal of ours, do you guys think, to be sort of unknowingly used by protocols?
Yeah, I mean, that's definitely something on the partnership side we're really trying to do so that users don't have to manually come use this. And one of the things we are sort of thinking about is for everyone who is farming some sort of position that is exposed to various stablecoins, right? We can use a portion of the yield to purchase the hedges for whatever stablecoins that they're exposed to. So very much like the DeLorean strategy where they're hedging against all of the 4 stablecoins that GLP exposes you to, any sort of like LP position that contains a stablecoin, or if you're, let's say, farming single-sided on places like either Wombat or a bridge, providing liquidity in those places, we think these will be like really cool, I guess, principal protected investment type strategies.
Yeah, and just piggybacking on what Karn said, that's definitely a goal of ours. An intentional design decision that we made with V2 was to try to make it so that it's easily integratable into other smart contracts. And on top of that, we're going to be in a short term rolling out programs to incentivize others to kind of integrate our protocol within others as well, to hopefully build to that goal where even if users aren't directly going to the Y2K page or interacting with our DApp directly, they could still be interacting with the contracts without themselves knowing.
Yeah, I mean, like one of the things that's supporting this kind of integration is the rollovers, right? So rollovers are going to enable our partners to continuously roll the positions and also the Q deposits. So we do not provide that time limited, time box deposit periods anymore. So the partners can actually build their systems on top of us whenever they want. They can just deposit the Y2K or click vault.
Exactly right, and the fact that the coverage is covering the whole like 24 hours of every day changes up the possibilities that people can really do with that in a huge way.
And I'd finish that to it. I think also because just generally the yields on Y2K are just very high. I think this will just attract DeFi participants and DeFi strategies, anyways. So yeah, we definitely think that Y2K will become an important participant in the DeFi ecosystem, and yeah, probably also unknown by the users.
That was a beautiful segment right there where everyone was piggybacking off each other. But yeah, Harry, actually, that's a really great point that you bring up. Just in terms of Y2K being such a great yield source and still largely unknown. So for the people on this call, what would you guys say is probably the least appreciated or known thing about Y2K that you think users should know about?
Yeah, I guess one thing I can say, I guess Karn had a good paper about that, but in terms of yield, the when you hedge against a market DPEG, actually once or twice a year a DPEG is actually covering all of your deposits over a year. So that's just I think that's undervalued, underrated, and not known for majority of our users or not realized.
Oh yeah. So this is sort of anecdotal, so take it with a grain of salt. But like, if you employ that like principal protected investment strategy, where like if you move out on the risk curve, like you farm the riskiest stable that you can still hedge against, then the riskier stables tend to give you more yield. So actually, you can purchase bigger amounts of hedges. So like, and then those do tend to have higher rates of paying out. So like, it is a really interesting strategy where you're actually able to capture more of the rewards that's actually associated with these riskier stables. Yeah.
Yeah, and another interesting note, going off as well what you just said, Khan, when USDC depegged, like a lot of other tokens depegged that just purely shouldn't. Like DAI made sense because DAI is composed of a lot of USDC, same with MIM. But then you had like tokens like LUSD, and like that's just backed by ETH. And then there was just like a couple of others that just fundamentally shouldn't have depegged what they did. And that's like another interesting approach where you can kind of look at, historically, at how like this like panic ripple effect, or not ripple effect, but like wave effect happens. And it's kind of, if you were buying a hedge while you were underwriting, a lot of the time with a bit of a like educated, researched guess, you kind of are raising your odds of breaking even or making profit a lot more by just having that like panic hedge there if a depeg does happen while underwriting.
Also, I think that VL, it's one of the most profitable LP positions, I think, in DeFi. I mean, already the ETH payout for VL holders was huge. I don't know exactly, but I think it's close to 100% APR. Yeah, that's. I mean, we are happy to provide so much value to the VL stakers, and we are happy that people choose to stake on VL Y2K.
I'd agree with that. VL's overlooked a lot, just because you are like holding an LP position on top of like the Y2K fees that you're holding. So it's just kind of like this like dual source of yield in the one position really, without having to like really rely just on like emissions and traditional kind of LP farming, just in things like not pancake, like beefy and stuff like that.
Yeah, these are all like really great points, and I agree totally. One thing that we saw with DeLorean yesterday is that, essentially what they're doing is the normal GLP vaults yield that they're getting. Let's just say it's like 10%. Well, by hedging with Y2K, they're maybe giving up a little bit of that. Let's say they go down to like an 8% yield instead of a 10, but they increase the upside in case that there is a depeg. So instead of capping it at 10, users could be gaining, 13, 14, 15% on their yield. And so this is potentially a really good strategy for future protocols or even stable coins that are offering, high yield strategies. So that's something interesting that came up through yesterday's conversation that I think we will definitely see more of in the future with our partners and different protocols that build on top of us.
Yeah, and that like aligns with what I was saying before as well, with like a lot of hedge funds buying these like black swan hedges, and it's like a really good source of premium for just little guys to kind of underwrite for. And it's kind of uh full circle come back to this, where it's like bigger protocols buying these black swan hedges. It's a good source of yield for not even necessarily little guys, but just people that aren't running DAO kind of structures, like managing that risk.
All right. Crip, did you have any last things that you wanted to add just to kind of close out this call?
No, well, yeah, actually, but yeah, just kind of wanted to thank everybody for, everybody being patient with us as we trying to port the system over to the V2. We know there's been a lot of bugs with just us just launching, and kind of that's why we had this short launch, the soft launch. We wanted to kind of bring everything over iteratively so the users get comfortable with how the infrastructure works. And we believe that in the long run, once we smooth out all the bugs and we port the whole system over, it will be a much easier and much more frictionless user experience. So yeah, just kind of asking for continued patience in this next month or so as we port everything over. And hopefully when we finish getting everything over from V1 to V2, it's just a much better user experience, and obviously, hopefully, people are still able to earn the same kind of yields they are on the V1.
All right. With that said, just want to thank everybody for attending this call. I know that, for those that were here, they heard tons of alpha, and hopefully that can help you educate yourselves more on Y2K and what we have coming up. So yeah, look out for the next call. We'll definitely have it sooner than this one, and appreciate everybody. Have a good day.
Thank you.
Thanks, everybody.
Thank you. Speak to you later.
Peace.